Welcome back. Wall Street just had a wildly volatile week, and we're breaking it all down in this explainer.
So, the defining narrative? A massive, honestly painful unwind in the AI and semiconductor momentum trade.
The bottom line here? Heavy, relentless pressure just slammed all the major averages straight across the board.
A huge culprit was the 10-year Treasury yield. It surged to 4.74%, creating a brutal macro backdrop. We did catch some midweek relief when the Treasury announced liquidity buybacks, giving rate-sensitive stocks a slight boost. That instability totally spilled over into our next macro driver. WTI crude oil spiked past $88. This spike, it was directly fueled by rising geopolitical tensions and the expired U.S.-Iran ceasefire agreement. The Treasury Secretary even threatened the, quote, greatest coordinated economic isolation in the history of the world.
Underneath all these crazy macro moves, we actually witnessed a violent, high-stakes sector rotation. The semiconductor index suffered a massive 5.5% drop as crowded momentum trades violently unwound. AI infrastructure names took the absolute heaviest hits, with Fabrinet, Luminum, and Coherent all plunging sharply. The crucial takeaway here is the money flow. Notice the stark contrast between defensive safe havens and tech. Investors scrambled for safe havens. Gold surged past $4,680, while healthcare and energy stayed strong.
Healthcare actually got a massive boost thanks to positive experimental cancer vaccine results from Moderna and Merck.
On the flip side, soaring yields in oil prices absolutely crushed consumer discretionary names, retailers, and homebuilders. Looking ahead, this week's wild action builds directly into next week's crucial PCE inflation data.
And after this week's semiconductor bloodbath, NVIDIA's upcoming earnings report is the absolute centerpiece for the market.
The stage is set. So, are you positioned for next week's volatility? Thanks for watching this explainer.